Namaste. And Bala, thank you for inviting me to Voyage 2020, which is a most impressive event at an auspicious time. Let me start with some context and a bit of background on Sun Life. Sun Life started over 150 years ago, and today we manage over $725 billion US of assets under management, and included in that is MFS, which is an active asset manager, one of the leading asset firms in the world, managing nearly 500 billion US. In fact, MFS invented the mutual fund back in 1924. Now, since Sun Life started, we've seen many changes over many years. We've been through the Spanish flu, the Great Depression, 2 world wars, the oil crisis, global financial crisis. Each crisis was different, but Sun Life learned a number of things that have helped us come out stronger on the other side. And I'll share 3 of those with you. And I think these 3 things are as true for you as financial advisors and true for you and your businesses as they are for Sun Life. The first one, never waste a crisis. In the global financial crisis, we used that opportunity to launch 3 new businesses that generate over $200 million of net income. In this crisis, we see the opportunity to accelerate the digital investments we've been making to put more daylight between ourselves and our competitors. The second big learning is that communication is critical. And by that, I don't just mean talking frequently with your clients, but it's how you do it. So being realistic, not glossing over the challenging parts, but confident. Being humble. So we don't know how long or deep this recession is going to be, but positive. 1 month from now, we will know a lot more than we know today, both about the progress of COVID-19 as a disease, but also the progress of the economy. 2 months from now, we'll know even more. And the third big learning is that your purpose is your North Star. So for us, our purpose is to help our clients achieve lifetime financial security and live healthier lives. And so everything we do during the crisis, around the crisis, is reinforcing that purpose as a company. Now, it's important to take a long-term view, especially in moments like this. And, for example, we acquired MFS 40 years ago, and we came together with the Aditya Birla Group 20 years ago. We think about distribution partnerships in a very long-term framework. And similarly, the success of Sun Life and MFS and Aditya Birla Sun Life Asset Management are grounded in long-term thinking about investing. Investment results go up and down, as you know, but what really matters is how you perform across a cycle. The analogy I like to use is, think of a man going up an escalator, and he's got a yo-yo in his hand, and he's throwing the yo-yo up and down. Some people focus on the yo-yo going up and down. The smarter investors focus on the man going up the escalator. And that is a longer-term view, and that's how you create value for clients. Now, a quick overview of some of the global trends. The global economy has lived through lots of crises. This one feels different. This is not just a health crisis, but it's a health, an economic, and even humanitarian crisis. Never have so many countries had the air knocked out of their economies at the same time. On the other hand, never have we seen such massive and synchronous monetary and fiscal accommodation. So we will work through this, but a number of companies will not bridge through to the other side. Many will need new capital, and that means investment opportunities. Supply chains will be remapped with more focus on buying local, and that means new investment opportunities as well. Massive increases to government debt. That probably means higher taxes. For you as advisors, tax planning is an important part of the alpha you generate in your plans for your clients. Low interest rates, massive government borrowing, driving up prices, dropping interest rates means lower real rates of return. Today, in fact, we have negative, in some markets like the United States, negative risk-free rates of return. And so the importance of that is that every single point of alpha generation that Birla Sun Life Asset Management and you can create for clients is precious. Every point of alpha generation is precious. And then ultimately, we could see higher inflation. And again, this is why clients need advice from a trusted financial advisor to figure out how to navigate all this. India has so far managed its COVID-19 crisis much better than other large nations. The numbers for India are far below what anyone would have expected for its size, its population, and complexity. And this is not to be taken for granted at the same time. And we've seen countries like Hong Kong and Singapore and South Korea, which have done a good job managing it, also had some relapses and having to shut down parts of the economy. So we're not out of the woods yet. The unprecedented crisis requires an unprecedented response, and the Indian government has taken a bold step on the economic front, and the stimulus package of 10% of GDP is a very large one. Markets have given it a big thumbs up. I'm sure all of you were smiling yesterday and today. To me, this is another example of my first point around a crisis. Never waste a good crisis. And here, the Indian government is not spending 10% just to bridge companies and people through to the other side, but to accelerate India's relative position in the world. And I think that's a smart way to go at it. Now, how do we come out of this stasis that we're in with COVID-19? Well, great minds are at work to try to figure this out. How do we bring economies back safely? There will be setbacks along the way, I guarantee it. And the administration will need to be pragmatic, adapting quickly. People will need to be patient. And the one thing I would say to you as advisors, and this is the way that we're thinking about our business, the path back right now is actually unknowable. We don't know whether it's a long U, a short U, a Nike swoosh, or any other kind of symbol you want to pick. We actually don't know. We really don't know. And I think the importance is to acknowledge that. And that takes me to the importance of the systematic investment plan, the SIP. This is one reason why a SIP is a great idea. I don't think people are going to be able to time this or figure it out, because in part it depends on the progress of a disease that has a lot of known unknowns. So that's a whole other subject. We won't go there right now. I'd like to wrap up with a few thoughts on our view at Sun Life on India and on the Indian economy. And I would say to you that our view and our excitement about the Indian economy remains as strong as ever. We think there's a tremendous opportunity. As I said, we started in Sun Life in the late 1800s. We had a thriving insurance business up until the 1950s, and then came back with a fantastic partner, Aditya Birla Group, to form the insurance company and the asset management, the AMC. It's the fifth largest economy in the world, third by purchasing power parity, incredible talent pool, hardworking, innovative, entrepreneurial. And with Aadhaar and UPI, India has leapfrogged most other countries in terms of the digital century. And I think that sets the combination of that and this stimulus, this 10% of GDP, I think sets India up for real success. We're very proud of our joint ventures and our partnership with the Aditya Birla Group. And both our asset management and life insurance joint ventures have really transitioned well to the new ways of working. Under Bala's excellent leadership, Aditya Birla Sun Life Asset Management was among the first large fund houses to move all of the operations to work from home. The team did an amazing job doing that, and the initial challenges were quickly addressed. And I have to compliment the whole team at Aditya Birla Asset Management to the focus on clients, the focus on advisors and our own employees at this challenging time was extremely well done. Redemptions under our equity and credit funds have been met without any challenge. And again, I want to acknowledge Manish and Mahesh. You guys are just doing a fantastic job. And this conference is a great sign that Bala, you and your team are responding positively. And I'm absolutely confident that Aditya Birla Sun Life Asset Management will come out of this even stronger. So in closing, I'd leave you with two thoughts. The first is around the value of advice. The value of advice is even more important today. A low return world, negative real rates of return in many markets. Every point of alpha is precious. And you as advisors have the potential to help your clients generate that. Vanguard and Russell and MFS have all published papers on advisor alpha and distribution alpha, estimating that strong advisors can add 200 basis points or more of alpha net of fees, systematic savings, making sure the behaviors are there, that they're saving at the right time, they're not selling at the bottom, buying at the top, that they're keeping a steady hand throughout the cycle. This has never been more important. In this data-heavy and analytical world, many clients still need the assurance of personal advice arising out of conversations on personal aspirations and fears, developing personalized solutions. Authentic advice from a trusted advisor is so precious. You won't get that from a machine. So this is a difficult time for our clients and a great time for you as advisors to really make a difference. And I'd encourage you to use this conference to learn as many ideas as you can to add to your game. The second main thought I wanted to leave you with is there has never been a better time to develop the digital capabilities and digital muscles in your practice. Digital will become an integral part of clients and distributors' lives. In this shutdown, in this lockdown phase, the ability to have a digital conversation with a client on Zoom or WeChat or WhatsApp or FaceTime or whatever is really powerful. Avoiding having to drive across a city of Mumbai or Delhi or Bangalore or Hyderabad or anywhere, instead of taking 2 hours to be able to have a conversation. Think about the ability to turbocharge advisor productivity through using technology and tools. Think about this crisis as an opportunity to turbocharge your practice through digital, everything digital. That's what we're doing across the Sun Life world. It's having a real impact, and I think it's going to be a game changer for our industry. So, Bala, I'll stop there, and happy to jump over to question and answer. And congratulations once again on a successful conference.
And thank you, Dean, for your wonderful insight and sharing your experience and being the head of one of the largest insurance company in the world, and also as a joint venture partner in India, both an asset management company as well as an insurance company. A lot of questions are coming from various participants. One of the questions which has come is, I think the last 1 month, rather 2 months, the equity markets have been extremely volatile, and it has taken away the returns for investors which would have generated over a period of 3 and 5 year period. Everything got taken away in a 1 month period. And during this period, when investors' confidence got shaken up, on these occasions, the question which is coming is, how should one go about one advising investors as well as even advisors themselves have to stay confident? How do we manage these situations to give the confidence to themselves as well as to the investors?
Yeah, I think first of all, acknowledging that concern of investors, that acknowledging the fact that the markets have gone down, the markets have been extremely volatile, and just acknowledging that you understand why people would be concerned about that. Personally, I like the escalator analogy and the yo-yo, the escalator and the yo-yo. I think it's a way for people to understand the longer term picture, the need to look over the longer term. But the yo-yo on the escalator is not enough. You need to complement that with data and go back and look at and be able to talk about some of the big, market volatile moments, 1987 crash, the global financial crisis, to be able to spotlight, the importance of systematic investing through those periods, and also spotlight the folly of selling out and cashing out at the wrong moment at the bottom. And to me, this is where advisors really add value, which is persuading clients to not sell right at the bottom. The other thing is to remind people that after this crisis, the world will go back, and people will need to buy cars. They'll need to buy bikes. The economies will be transformed. The Indian economy will continue to transform. It's unstoppable. I mean, the movement of people into the middle class, the development of India, and all the dreams around economic expansion in India there'll be stops and starts along the way, but the direction of travel is unmistakable. And I think investing in that for the longer run makes a lot of sense. So I think it comes back to, having a bit of an analogy with the escalator, the yo-yo, having some data points from the past, but also looking past this immediate crisis and saying what is true, what continues to be true about investment in India and economic growth in India. And I think when you think of it that way, it's a positive story.
Yeah, thanks, Dean. I'm sure this will be quite useful for people to give the right advice to their investors. Yesterday, of course, I'm sure you would have had a very brief noting of the Prime Minister's address yesterday on Indian economy, where he has committed 10% of GDP would be used actually for providing support in the current COVID crisis situation. And the Prime Minister also has gone about building a tagline which says that local and one has to be vocal. Basically, it's a local brand, local manufacturing, and one need also be local. And given the fact that Sun Life, being a $1 trillion company and having presence in the global market, including Asia, and India being one of your largest foray in the asset management business and insurance, how do you see the current move of Prime Minister in the eyes of global investors?
Yeah, I wasn't surprised to see that part of Mr. Modi's message to favor local and buy local. This has been a trend. Frankly, the United States started this, and the United States is going at it with China. But, this crisis has accelerated that. It starts with just the supply chain around personal protective equipment and drugs and medical. And I think, but it's expanding to other industries and other services. I think ultimately it's a game changer for investing. And what it will mean is, and this is what, your team is so good at, Bala, which is kind of understanding what does this mean to manufacturers here in India if all of a sudden it's going to be a more local market? What does that mean to the supply chains for those businesses? What does that mean for the demand for those businesses? And what are those investment opportunities going to look like? Ultimately, it will produce inflation, right? If our countries are all supplying things locally, it's going to be more expensive in a number of cases. And I think that's going to drive inflation, and we need to think about that again as we invest, and what sectors will benefit from inflation and price inflation, which are going to get hurt. So there's a lot to think about. This is a pretty big change. The world is changing. The world is changing from global integrated supply chains to more local self-sufficiency. And it's a pretty big pivot coming out of the crisis. It started before the crisis, but the crisis is going to accelerate and accentuate it. And I think, again, that's why our clients need advice from a trusted advisor. That's why they need the support of Birla Sun Life Asset Management with decades of experience and wisdom around how these things work.
Yeah, thanks, Dean. I think that's quite useful and understands your bullishness on India. The second challenge that I think most of the advisors are going through, including money managers, I think last 4 or 5 years, actively managed funds are not able to beat benchmark. And globally, within even India, that people have been debating about how far one should look at the index funds versus active managed funds. And in India, the active managed funds is a larger component of the assets under management. Do you have any sense in the sense that how directionally is actually is changing? Also, given the fact that we all as active money managers, we always believe generating alpha in a markets like India is far easier, given the fact there are about 5,500 companies listed. In this context, it's often it comes in the minds of people that what path one should take in this direction.
Yeah, I think it's interesting. The world has shifted towards more passive index funds. You see that particularly in the United States. But what's interesting about that is the shift from active to passive. It hasn't completely stopped, but it's slowing down. And when you look at retail advisors in the United States, many have shifted now to a flat fee, a 100 basis point fee or a 75 basis point fee. And in order to explain it to their clients, they've said, look, my fee is 100 basis points, and I'm going to put a chunk of your assets in passive where the fee is only 20 basis points, and then I'll have some in active. It was never going to be 100% passive. And because as an advisor, what is it? The client then says, well, what are you doing for me? You're giving me the index, and what do I need you for? I could just buy the index. So it was never going to be 100% passive. And what we're seeing at MFS, MFS reported positive net flows in the first quarter, $1.8 billion US of positive net flows. There were 25 of the largest fund houses in the United States that of the 25, only 3 were in positive net flows, and one of those was MFS. And that's in the retail space. And that's in part because the ability to add alpha, but also it is slowing down the shift to passive. And I think especially, when the stock market drops 20 or 25%, there are a lot of investors who didn't realize in a passive fund that they had so much beta. And were surprised to see when they opened up their accounts or looked at online. Now, a lot of it came back, but there's a lot of volatility still to play out. And I would say there's a lot more volatility to come. And I think people who are in pure passive, we're going to see more clients surprised by how much beta they have. So, again, we're big believers in alpha generation, especially, as you say, Bala, in a market like India. I think, Sun Life, we've invested, a large chunk of our own balance sheet in, as you know, with Birla Sun Life Asset Management. I have some of my own personal money invested with you. I'm cheering you on, but I believe in India to the point where I've written a check myself and have invested in the Birla Sun Life Asset Management funds. So, we have high conviction in your success.
Yeah. Thanks, Dean. I think it's clearly a good endorsement for the India in general on mutual fund alpha generating money managers, as well as your own convictions of putting money in India through our funds. Of course, there are many questions that has come that are more local in nature. That's why I'm not asking those questions, such as an SIP. I've been investing but not generating return. And somebody asked a question about what is your view on Indian economy for the next 2 years. Of course, some of it you have answered on showing your conviction on India. And I'll ask the last question from my side. Given your own 20 years of involvement with India, and you yourself personally have managed the big growth for Sun Life from about $400 billion company to about a $1 trillion company. If you can just give the insight about your commitment to India in general and to the asset management industry, where we are one of the 4th largest asset management company in India, and we have been expanding continuously. And your view on AMC business in India would be quite useful for the audience.
Yeah, it's you're right. We've had a great run at Sun Life. We've gone from 400 billion to $1 trillion. It's amazing. It took us 145 years to get to the first 500 billion of assets, and it took us just 6 years to get the next 500 billion, which is the power of compounding and growth and investment. And I see the same happening in India. I've watched the growth of Fearless Sun Life Asset Management and the mutual fund industry. And when you think about mutual fund industry in India, in the United States, mutual fund assets, AUM as a percentage of GDP is now over 100%. In India, the last numbers I saw were 11 or 12%. So the growth potential is absolutely enormous. We've been in business 155 years, so we tend to look at things over a long period of time. Think of things in 10-year chunks, 10 years and 20-year chunks. I am absolutely convinced that over the next 10 years, the mutual fund industry in India is going to flourish. It's going to grow as the country grows. I'm absolutely convinced that India is going to grow. I say to people, it'll never be a straight line. There will always be surprises along the way. But the world's largest democracy, with the ingenuity, the hard work, the entrepreneurship of proprietors and the people in India, this technology advantage that you've created, you've leapfrogged. We're bullish on India. I'm so glad that we've got a bit. Many of our global competitors are not in our position with this relationship that we've got with you in India. We're thrilled to have it. So, thank you for the question, and thanks for including me in your Voyage 2020.
Thanks, Dean. I think it's a wonderful conversation with you. After I can take back on behalf of everyone the message that yes, mutual fund is an asset class to grow. And though I can take the liberty of saying investing in Aditya Sun Life mutual fund, thanks to the support of shareholders, money is safe, with the disclaimer that mutual funds are subject to a market risk. Thank you, Dean. Yeah.
Thanks, Bala. Take care.
Yeah.
Bye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.